Ladies and gentlemen, welcome back to the FinStep Asia FinTech Decoded podcast. I am your host, Syed Musheer Ahmed, founder and MD of FinStep Asia, and with me is my co-host.
Monica Jasuja.
And with us today is a special friend and a FinTech thought leader, Sam Boboev, who is the CEO and founder of FinTech
Wrap
Up. And we are very delighted to get Sam on our podcast. He's got a very successful podcast or podcast himself and has been a great contributor to thought leadership and getting people to understand what's been happening in the fintech ecosystem. He's moved to London in the recent months, and we're very excited to have him on our podcast. We're covering 3 time zones today. I'm in Hong Kong, Monica's in India, and Sam's in London. So there you go. FinTech makes the world go around. Welcome, Sam.
Guys, thank you for having me. Musheer, Monica, it's great to meet you in person, even though it's online, but it's really nice to meet you, and thank you for inviting.
Hopefully, we will meet in person as well. Sam, maybe before we dive in, today we want to discuss on the topic of OUSD and what that means for the FinTech digital assets payment ecosystem. But I would love to, before we take a dive and get to know and have our audience also know a little bit more about yourself and the FinTech wrap up. So just, give us an introduction, how you got into this world of FinTech and how did you get into the wrap up as well?
Yeah, guys, Sam, by profession, actually, I'm a product manager. I've been working in the industry for like 8 years now. In the past, I had the chance to build wallet products, card issuing, and across Asia, Europe, and the UK. Originally, I am from Uzbekistan, actually. This is where I started my career in fintech and general tech, and then moved to the UK, had the chance to work in Europe on card issuing, wallet products, card processing. And in parallel, I was always curious what's happening in the market and writing on LinkedIn, sharing my thoughts, insights that are happening in the market, as well as I was writing 2 newsletters, FinTech Wrap Up and Payments Wrap Up, sharing different kinds of content. And now, like 6 months ago, I launched my podcast. I have 2 of them in one, which is called Wrap Up. We discuss fintech, banking, AI in fintech, in agentic commerce, and etc. And on the ground podcast covers latest tech and AI developments and news in the market. And hopefully today we will dive into the latest news, OUSD, which was launched by 140 companies. Really interesting how they will be able to manage all the developments and approval processes.
I have some spicy news that I read about that, which I'll bring in a little later. But Monica ji, your thoughts? You've been in the payments world as with Sam. You've seen and worked with some of those big names that have launched this. Maybe if you want to give an introduction to our audience about what it is and what it means for the ecosystem, and then we get Sam and my views on top.
So 140, I think, if I get that number right,
Yeah.
companies have come together to launch what is going to be a dollar-pegged stablecoin. And it's launched, it's called Open Standard. It's an independent company. 140 companies, some of the largest, absolutely biggest payment companies in the world, including Stripe, Visa, MasterCard, BlackRock. And these are just the launch partners. So going forward, I'm sure there will be many others who will join in. And it is expected to have a governance which is launched again as an independent entity. So this is supposed to help. And this one statement got me thinking, and I'm sure that we are all going to have to decode this for our audience, is that they wanted to have an independent entity set up in order to distribute revenue back to member partners. Now, that's the most interesting story because it seemed like a direct impact and competition to one of the other companies that actually keeps the yield to itself. And that debate actually kicked off on what this will do to Circle. And then we saw what happened to the Circle stock. And ever since then, I think every single media outlet and every single payments person has been debating on what this really means for the complete ecosystem. And therefore, how the entire space now changes in order to not just welcome OUSD, but also to see the impact. And I would think the mainstream adoption of stablecoins going beyond the hype Now, with the backing of these trusted network providers and the biggest companies in the world, looking at how it actually scales up from beyond crypto, which is the majority of the volume, into actual P2P and settlement flows. So that's my take.
Sam, your thoughts?
Again, 140, some of the biggest names in the market. And this reminds me Libra by Facebook, guys. If you remember in
Correct.
2019,
Yeah.
they also had really big names, including PayPal. I don't know if there was Visa and MasterCard, but they had
They
some
were,
big
yeah,
names.
$10
They
million
they
each, right? Yeah.
Yeah, they also want to be one of those leading crypto coins in the market, be it like distributed among all of these partners. They will be co-managing, but unfortunately, it did not work out. I'm curious if this time it will work out because the market says at that time, basically, we did not have any regulation, and eurozone and the US as well, they saw a threat in Libra, as Libra was basically sort of like a threat for them. That's why they all tried to block them. Once that they had hearings, all the partners started dropping out of this coalition that they created. But they say now we have regulation, at least in the US already, maybe in Europe also we have MiCA. That's why everything should work out from regulation perspective. But again, time will show if this really will work out or not. And on the other hand, the another thing I'm thinking about is it will be how easy it will be to get all of these companies to sign on, let's say, certain steps. Tomorrow they want to do XYZ. Will they really come on and all of them agree and sign on that? Will that be so easy? Especially when so many of them are competing with one another. Ripple and Coinbase, they are competing. Mastercard and Visa, they are of course competing with one another, even though they are in this together, but they are competing with one another. So how that will work out, I'm really curious. And of course, time will show if they will be able to come on and sign on developments and if they will stay moving forward in this consortium. But yeah, these are my views.
Both of you have touched upon that payment piece very well, and I'm not a payments guy. And for me, three things stand out. The Libra piece is very, very important in terms of replication, right? One thing on the Libra piece, which is very different to now, but the context is very important, is there you had the biggest worry that central banks have had in a long while from a private company, because Facebook was the under Meta now. I mean, change of names, but essentially having about 1.5 to 2 billion users on Facebook, about a billion each on WhatsApp and Instagram. A lot of them are overlapping. So say 2.5 billion people in 190 plus countries, right? That just became a monetary policy concern that, oh, now you have a private body that can provide monetary rails. There's money laundering issues. There's a whole host of how you manage monetary policy, because people are being able to transfer value across borders and locally. And that became, I think, the biggest threat. And that's why it didn't take off, because it was a very huge cross-border conversation. Here, for me, the difference is one, it's just $1, right? Libra was going to be based on a basket of 10 currencies or 15 of the G9, G15 currencies as such as well. Whereas here it's going to be on the dollar. Again, as you rightly mentioned, Sam, there is a regulatory framework across major jurisdictions here, or on its way, like in the UK within this year and in some others as well, which then, with the Genius Act especially, provides you with a regulatory framework that everybody can rely on. And it is on the US dollar, so one currency. The third piece is it's being driven, unlike in the first case, by the big tech firms, whom everybody have had issue from the US all the way to East Asia as well, where their wings have been clipped or curtailed, or a lot more governance has been brought in on how they touch financial services. Here it's being driven by financial services firms, in particular Stripe. I think that's a very important piece, which is facilitation of the payment is happening. And so these payment facilitators are saying, here, just let's use one thing. Now the governance area, etc. You may also miss. My take is it can work. I completely agree. The governance ideas will be a challenge. But if you take a step back and say, can you apply the same principles Swift has been operating on for the last 40, 50 years, essentially with tens of thousands of banks, right? On governance, on policies, which is Yes, it's a message, but still that's number one. Number two is you consider it as $1 source. Some of these players who are banks or may manage the reserves, while everything else becomes that's our source for US dollars versus using a central bank source or whatever, right? So you're using these instead of correspondent banks, reserve banks that
Yeah.
provide the dollar, and that becomes the easy part. So everybody else, you're not necessarily competing. You just are relying on one versus using, USDC. You'll have JPM coin. You'll have, a bunch of banks in the US. All are thinking of launching their own stable coins. And my final piece, and I would love all of your thoughts on this, is so this is what stuck out to me about this was most of the globally systematically important banks are missing from that list. In particular, all of the major American banks, HSBC is also not part of that. Forget the Indian banks because they're still dealing with stablecoin and regulatory concerns, and Chinese bank is a similar story. But HSBC is not on it. None of the major American banks are on it. And this is a US dollar stablecoin conversation. None of the major European banks are on it, who themselves had set up a consortium of what 9, 10, and I forget the name. It's not coming right away to me, but you do have that as well, right? So that for me
Yeah.
was a very interesting piece where it's everybody except for the really major banks who are moving the big money. Thoughts?
In my opinion, I think big banks, especially in the US, they will not come on board because recently JP Morgan Chase, Citi, Wells Fargo, and few others, they also built this type of collaboration to launch their own tokenized deposits, which was against stable coins in the market. And because we know one of the most attractive features of stable coins, yes, it's fast, it's 24/7, settles quickly. But one of the most interesting things is yield. Most people, consumers, I assume at the moment, are attracted to it because of yield. It offers better yield than bank deposits. That's why people are going there. And if you remember, CEO of JP Morgan Chase said about Brian Armstrong, particularly the phrase he said when they were discussing the Genius Act, if I remember correctly,
Yeah.
and the yield particularly, that they will never agree on whatever is being proposed at the moment. So that I don't think that I don't know about other banks in the world, the rest of the world, or UK or Europe, but in the US, they will not come on this board. Rather, they will go and compete, especially offering their own either coins, JPM coin, or they will heavily push towards tokenized deposits, which is particularly bank stuff, and will not take deposits from out of the banks to other players in the market. And it's really interesting to see how Circle and Tether will react to this. Tether, they welcomed it. Circle said, even though their stock was down, we are still the biggest. We are the best. So I'm really curious. Monica, what do you think?
I actually want to answer one thing on Libra. And before I go ahead, I was having a conversation with an ex regulator, and he said very categorically that Libra was killed simply because the regulators could not stand that there would be a private company of the size and, to be honest, with intentions such as big as Facebook at that time and now Meta. And they did not want the movement of money and therefore money as an instrument to be in the hands of a big tech provider. And if you talk to central bankers, completely off the record, many of them will admit that a lot of the CBDC and therefore the parallel instruments and rails that are right now being set up are in response to actually manage the concentration risks that we have, not just with big techs, but now a lot of private held companies with lack of governance, as they claim, and also lack of oversight. Therefore, it's very difficult to regulate what you really don't know about. So therefore, this whole Libra experiment failing, and Sam, you absolutely threw me off balance, because I wasn't expecting Libra in the conversation, and that's a great point, because why it failed is exactly the reason why, if OUSD has to succeed, then it has to do things differently. And the two things to me which stand out, because I've actually worked in some of these companies, is that when something like this, as big as this, is formed, my thinking is that the governance is actually pretty well defined, because a lot of these companies exactly know how it works. They work They're all mostly publicly listed companies. Many of them have boards that have the most senior people in the world. I'm not worried about governance issues. I'm more worried about whether this loses track, it loses pace, because the people become less interested, because there are intersections of where there are common interests, but there is a whole lot of divergence. And when the divergence starts becoming bigger than the intersection, then you start losing ground. And I'll give a small example. Now you have Stripe, and Stripe can really partner and make anything acceptable because of the largest merchant base in the world, inarguably. Question is, will a small merchant be pushed into the corner to accept this because Stripe says so? And if that becomes the default, that's great. But what if another consortium partner wants to do something like, for example, in settlements, because that's the one use case that is up for disruption, cross-border payments, but solving the settlement leg. And I myself, for example, in 15 days' time, are releasing a white paper on just the cost of cross-border payments. So when you start thinking about these and divergence, then I start becoming a little bit more worried about the impact. And Sam, absolutely, like you said, we've seen experiments like this in the past. It's all a lot of great hype, great news media headlines, but then what happens? Like, what should we be looking at as a litmus test that will take this from a launch to actually hitting the rubber on the road is where I'm most interested in. And there are a lot of questions. By the way, I think Musheer and you both talked about these two and the yield piece, right? Could we double click a little bit on this for the users? Because not a lot of us have access to stablecoins in some parts of the world, obviously owing to regulations. But when we think about this one-to-one dollar peg, etc., and with the volatility in the USD currency, is it fair to say that this attractive feature mostly holds for these countries, which are obviously the US and a lot of others where the currency volatility is very high? Therefore, having a bet on USD is the safest way to go. And if this yield piece goes away, in terms of how we are thinking about it, then what really is of interest? Like, what will attract users to OUSD or merchants to OUSD?
Probably two things, if you want to break that down slightly further, right? The first part is with Open USD, what is the primary use case? Cross-border payments. Essentially for regular payments, less so. Probably, yes, because Western Union and a bunch of others are also there. There'll be remittance use cases, but it feels like, okay, here's our payment use case that this will primarily rely on. When the yield conversation comes in, this was the Clarity Act that is being, so Genius Act passed, everything was fine.
Yeah.
The Clarity Act, the Genius Act said stablecoins can be issued in the US, blah, 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 doesn't need a massive charter, it's an easy play. The Clarity Act was supposed to go into the weeds of how this would work, how the rest of digital assets will work. And then the pushback is that the crypto firms want the act to allow stablecoins to be stablecoin providers to also offer yield to stablecoin holders. And the banks are saying, no, that should be limited only to banks, which is what you had with the JP Morgan CEO coming in, Jamie Dimon saying, right? So that piece is on one hand, which is a very local US clash. Now, when you take that globally, I feel number one for stablecoins, one is your pure play. I need US dollar for making my transactions because that's the most used and widely accepted currency in the world, right? So pure, I don't care about yield. I want access to this most liquid of assets and most accepted of assets as well as a combination. So there, no one cares about yield. The second piece is again, people in say markets or in jurisdictions where their economies aren't doing well and their currencies are depreciating. I don't want to name countries, but we've had a bunch of economies that have failed or their currencies have failed multiple times, right? Or in the recent past, there's been significant deterioration or devaluation of their currency. So they feel holding the US dollar gives them stability and protects them against any devaluation of their local currencies, either due to high inflation or sanctions or whatever there is, right? Again, in this instance, they don't care about yield. They just want that stability. One stable currency that may fluctuate 5% here and there, but it doesn't really change and it's acceptable anywhere. Then comes the third piece, which is what the yield piece came in more so from the USDT perspective, where people wanted to hold US dollars and earn their interest in US dollars. Again, similarly, where their local currencies were depreciated And even if they're getting a higher yield, right, or interest rate locally, in dollar terms, they were losing. Hence, this was a piece. So I do feel the yield piece is not as major an issue. And if even if you don't offer yield, it won't significantly impact where stablecoins are heading. And my view on where stablecoins are heading is primarily one for cross-border payments, specifically for remittances. I think it's going to be the case. We had Swift announce the progression on their project to make near real-time payments, right? Cross-border payments. We had Westpac initiate a transaction in Australia using Standard Chartered into India and receiving a bank in 37 seconds, right? And this is not a POC, it's an MVP, which is supposed to now expand to other jurisdictions and become prevalent. So when that happens, you're like, do I really need a stable coin, right? For remittance, that goes away as well in the future, but currently probably still is needed. The second piece where I do feel it will be the big difference is when we see the tokenized assets, BlackRock, everybody else talking about tokenizing financial assets. Let's forget every other RWA. Let's just talk about securities. Those goes into trillions of dollars themselves. They need a transaction layer. And that is going to be a stable coin in US dollar or local currency, but US dollar, which is 24/7 and operated by a reputed regulated body or a company. So that's where I do see this growing. And that's where I see the biggest opportunity for stablecoin, less so on the yield piece, more so on the transaction layer for tokenized securities.
But
Sam?
do you
Yeah.
think? But do you think this is? You mentioned like emerging markets, and especially for stablecoins, those are the places where stablecoins are used most. For the US or Europe or the UK, I think there is no big of a problem with transactions, cross border transactions. They have local rails which are quite fast and settles quite fast, but. And on the other hand, you mentioned governments or consumers could be interested in this because their local currencies are fluctuating. However, I have a question regarding the governments. Don't you think that governments would like to avoid becoming too dependent on US dollar because now these um, US based, mostly US based, let's say companies will start dictate them what to do and how to do, which I don't think any country likes. But that's why I think some countries are working on sovereign stablecoin or I mean, some version of it, CBDC, be it CBDC or whatever that is, they're working some. Don't you think that will make them somehow oppose rather the idea of accepting these types of solutions and be dependent on the US currency, US based, mostly US based stable coins? What do you think?
My quick take, and Monica will definitely have her thoughts on this as well. Number one, when you thought of crypto, some of the central banks, including in India, have written about how they see this as a risk to their currencies because it's dollar dominated. So there's the dollarization risk that local
Yeah,
currencies feel. However, the way I see it is what 70% of all you know money movements are in US dollars in any case, right? I don't
right.
see that 30% getting replaced by this new stable coin. I see that existing 70% moving from being traditional digital banking payment rails, or in some instances cash for a small percent, moving towards that stable coin rail, right? And so for those who want to hold the yield, hold those stable coins in those countries, right now they may be holding it in cash, right, in US dollars. This
Yeah.
just gives them a digital way of doing it, and it may likely be on a borderline where the governments may not allow that, and they may bring in restrictions because they want to protect their currency. So very likely the capital controls will kick in, not just in those economies, but also strong countries with strong capital controls, including India, mainland China, Japan, and others when it comes to capital controls. So very, very much possible.
Right.
I have a slightly more balanced take on this from the Asia Pacific perspective, and I'll tell you why. Because there has been a lot of talk about deglobalization and national sovereignty when it comes to any types of payment systems, and we know the regulators stand on mostly on anything crypto related, and having said that, also on dollarization. India is hosting the BRICS this year. there was a lot of talk about de-dollarization and creating a BRICS currency. And, it keeps coming up and going back again. So I'm not even going to go there. That's a topic for another podcast. But the important thing here is that when there is, I think, Sam, to your point, there's a very important case here. Nobody likes being dictated to by the biggest, most powerful currency and therefore the country in the world. And because there is much underway right now with dollar trade being replaced by bilateral connections in terms of other currencies being used, and India just, Japan just announced about India and trade actually happening in yen. So my question now becomes that when something like this happens, how will the other countries react? Because let's be honest, everybody wants to have a take in this, and SWIFT succeeded back in the days where globalization was a concept. Now it's all about regionalization, first localization to the point that local has to trump everything, and then regionalization, which is very difficult. There is enough to prove that that also hasn't really taken off. And then there comes the selective bilateral connections or multilateral connections, which are also difficult. Now we have consortiums which are telling us, okay, this is how it's going to work, and everybody accepts it. I'm not sure that runway is going to be easy. But having said that, I want to ask one question again and also put my thoughts across this. When we talk about 140 companies, great. Many of them are US based, many of them are completely US centric with global pathways, which have been created for countries, but very US centric. There is a very big, very, very big case for how people think about US centric versus everything in US related to what's been happening in the last 6 months. So my question will be, when in the presence of an act which is legislation now, which says how stablecoins will work, but what happens when number one, the issuer is consortium? It's not one single entity. And second, it's all US centric. How do the regulators start thinking about this concept? Because we barely absorbed what's happening with stablecoins. And now we have this horizontal. And that itself needs to be regulated. And then, the other. So my mind is like not able to process all this. I just don't know how this is for me. And I'm sure everybody has, which is when the issuer is a consortium, not a person or not a company or not a publicly listed company. How does it all work?
And on the other hand, I'm really curious how this will work in Europe with MiCA regulations. So far, in Europe, only regulated big company is coin company Circle. Tether is not regulated. They are basically out. Revolut recently stopped supporting them. And when you have 140 members, how that will work? Will you come to Europe and obtain MiCA? How the processes will happen? And especially regarding the reserves, as you know, MiCA requires you to hold 60% of your reserves in euros locally, and how that will work. I'm also we discussed emerging markets. Okay, that's okay, but we have again some of the most capable economies are in Europe, in the UK. How this will work, that's another open question. I'm really curious how this will happen.
That's going to be quite interesting because two elements to it. One is issuance of a stablecoin in the market, and second is the use of a stablecoin, right? And that's where you saw Circle have got the license to issue a fiat reference stablecoin in Europe. Tether doesn't have, so Revolut will offload that, right? Now, OUSD, potentially, you may end up first seeing them issue it out of the US and then try getting the MiCA licenses. The governance around it probably very well, as I said, there probably will be a couple of reserve banks. When I say reserve banks, the ones who hold the reserves, who will issue the token, while all the other 140, I actually have some news on that as well, but those companies will be partners who will use that token, right? Use the stablecoin. Not all of them are issuing. This is the ecosystem that will use this, right? So if you see the names, you have a bunch of big techs, you have banks, you don't have telcos, but overall, this is the conversation. So the news I was talking about was that over the last couple of days, you've seen news that some of the Korean firms, including
Yes, I saw that.
Samsung and Dunamu and others, have denied a formal role, right? So what these guys have said was that we had conversations. Some of them said they had conversations, but there's no formal talk or an agreement to be part of it. So it feels more like, I mean, I'm reading this news which says that there had been no official consultations and they did not know what the role is in the consortium. So it feels like that 140 number probably will be smaller, and they will definitely be the Aji with Circle and others coming back on that and saying, integrity and all the other elements. So I feel it's 140 potential partners, and they may have had some conversations and they've included them. While we will probably in the next month suss out who it is, because now, as with Samsung and others, it's big enough news, and they will have enough opportunity to whoever needs to come back and say we are not involved, right? So that will play out because quite a few of these institutions will be asked by their regulators and others on what that involvement is, and or if these are listed companies, they'll have to make those statements. And when we're going into in July, we start having earnings season, so they will have to answer that in the earning call. So it will definitely be very interesting. The regulatory play definitely comes in, but I do feel they will be able to, even if it's 30, 40 firms, let's say, right, very pessimistically, who end up being part of this ecosystem, they would be able to get those licenses because it's largely institutional players and very few startups, if I may use so, or non-regulated gray area companies as such. So yeah.
I'm also just like a Libra. If there are hearings, I'm curious how many of them will drop off. As you mentioned, most probably in the end it will not be 140, but rather smaller. Also, you mentioned in the beginning, I also don't remember the name of that consortium, but in Europe, big banks, they also are doing similar products. They are launching similar products, and I'm curious how they will react to this, and if they will simply allow this product and come like basically take over the European and the UK market, or they will push harder on regulation, saying like, okay, we agreed on Circle because this was one company and they're like following the rules, but this time it's mostly US based companies and they are pushing for more dollar based, let's say, stable coin. We don't want that, and like push on this and saying like, no, you have to use our own coin if they launch coin. And this will be the main, let's say, mean of a transaction in Europe and the UK. These are all still open questions, and the development will be really interesting.
They're called Hivalis, right?
Hivalis, yes.
Hivalis, yeah. I think this is just going to be competition. It will then boil down to whether people say, okay, let's just have one and just get over and done with. This is just a payment layer, and we don't want to go into this competition because, frankly speaking, we didn't get into it, and maybe we'll do it in our next podcast, is the economics of stable coins, right? For issuers, for users. What if for issuers in particular, it's a bit patchy. Unless you are, you're earning the yield through treasuries, okay, that's your main focus. But as regulations bring in, there's regulatory costs, there's operational costs. So are you really making money, right? That comes in. So it's a utility layer that people may offer, like Google Play does in India, which is not really, it's more for bringing the ecosystem under that play for Google, right? So that's why I feel we will start seeing narrowing down of the number of stablecoins. Plus, with more jurisdictions like you now have with Hong Kong, Singapore, UAE, and a few others, there will be a limited number of companies that will get a stablecoin license. And then it'll boil down to mutual recognition of these regulated stablecoins to operate. So, yeah. I mean, how many dollar stablecoins do you want in a regulated world? Eventually, it will consolidate over the next 3-4 years. Let's see.
I want to draw attention to one very important fact, and the fact of the matter being that when there are smaller transaction volumes to certain parts of the world, and that this is a common problem that we see with cross-border payments, we never prioritize those countries that need technology the most because they are very small corridors in terms of business volume. Now, what happens when, and that has been one of the biggest criticisms of larger companies, that they tend to look at volumes and optimize, and therefore the rich get richer, the poorer get poorer, because the highest cost and fees are associated with low volume corridors. Now, imagine when the yield has to be passed on back to the consumers, will it be that the ones who own the most, and therefore it's almost like the biggest analogy that can come to me, and the best example would be like interchange. The countries that can afford it tend to pay the least interchange, simply either because there's regulation or there are high volumes. And the corridors that should be subsidized because they really cannot afford to pay that much are often overlooked. And I think that's going to become the crux of how we think about who is in that consortium and what the interplay of what they already do best and how do they translate this into this business. And we have to keep this in mind, because when we're talking about equitability and we're talking about what will be the use case that is the most disrupted, the fact is we have so much inequality in that itself that having a very one country kind of version does not have a one size fits to the rest of the parts of the world, which really need that disruption because they need those corridors to be safe. And I'm not sure whether this will answer it, but only time will tell. And that's really something that we have to look at very closely in terms of the equitability of distribution of the yield as well as how it is offered back.
It's a wait and watch in a lot of cases. Though things are moving very quickly, the fun part in some senses, and for me, is we're seeing all of these developments not as phases. We're seeing a lot of stuff happening on the real-time payments from Nexus and UPI and all the others where they're trying to bridge that. Again, beneficial for consumers. We're seeing a lot of work on the Swift cross-border payments. Time-wise, again, benefit for consumers. This stablecoin conversation, again, time, cost, again, benefit for consumers. So I do feel we're moving towards a world which will be very beneficial for us and for users. You will see these payment costs come down. I may be being optimistic, but I do feel they'll be tougher to justify high cost of cross-border payments, at least in regular corridors and with new mechanisms. And it will now become a commoditized play, which it should always have been.
I'm looking forward for all of these products to be actively launched to the market. Yes, I understand that now majority of stablecoin activities are happening in, if I remember correctly, in America, Latin America, and those regions. Though I am from Uzbekistan, which is Central Asia, I do a lot of remittance. The cost is still high, even though we have so many products, including stablecoins, which, by the way, does not work really well in Uzbekistan. Unfortunately, I have to give the example of Uzbekistan because this is the corridor that I use. I do remittance to my family in Uzbekistan, back in Uzbekistan, and the costs are still high. And most of these stable coins are not available. Even if are available, those are not regulated, and government strictly prohibits to use those coins. Unless you are a regulated entity, you are not allowed to use. So, and Swift is doing so many stuff like the blockchain related developments and etc. But again, they are for some reason are not available on all the countries. Yes, the argument is those corridors are too small. That's why maybe those are not very attractive. But if we say stable coins are for the sake of emerging markets where the currencies are volatile and you would prefer a dollar-based a stable coin or whatever instrument that is, then let's try to implement them in all the regions and make them available to all the customers, right? I'm hoping those products to be launched in Uzbekistan and come to Uzbekistan very soon.
Let's hope so. And I saw a post as well that beyond the SWIFT conversation between Standard Chartered and others, you now have European banks also coming into picture on this, right? So and that's the exciting part in the way we move forward on this. Yeah.
Sam, you absolutely underlined the point, which is about which countries get offered what rates. And that's the entire point. Like, I know we are beating on an old bark associated with exactly the same point, but it's just sometimes so unfair that we've not even been able to see the spoils in many of our countries with a lot of these technology related improvements and really hoping better lives. But we're not seeing that change fast enough. And I know and I hope that will happen very soon for many of us.
Yeah. Perfect. I think that's a good note for us to wrap up our first collab and having you on our podcast, Sam. And as I said, I hope we all can collaborate more and maybe do a monthly decoded wrap up, as it were, and bring in some of our friends from Switzerland and in the US to join as we bring in some more insights for our audience. So thank you so much for joining us. It's been a pleasure having you on FinTech Decoded, and we're looking forward to more collaborations and interactions.
Really enjoyed the conversation. Thank you for having me.
Thank you, Sam.
Audience, stay tuned for more such insights and thoughts from all three of us. Follow both the FinStep Asia FinTech Decoded podcast as also the FinTech Wrap Up. You will see both on your post. This is going to be a collab on YouTube and beyond. So keep following us together. Click like, subscribe, and follow us to get your insights on time and stay up to date with things that frankly are moving faster than even AI can handle and tell you about.